In this video, we will discuss income tax updates for the month of March 14. You can also view more updates related to income tax during the month of March 14 in our earlier presentations. Let's take a view on the highlights of updates. Amendment in the list of entities authorized to issue tax-free secured redeemable non-convertible bonds aggregating to amounts specified. Approval to the undertaking being developed and being maintained and operated by Messrs. Pantheon Infrastructure Pvt. Ltd. Mumbai as an industrial park. Under Section 80 IA IT Act 1961, deductions, profit and gain from industrial infrastructure undertaking being developed and being maintained and operated by Finance Promoters Private Ltd, New Delhi. Approval to the undertaking being developed and being maintained and operated by Creative Infocity Ltd, Gandhinagar at Gujarat as an industrial park. Clarification as to what will be the amount exempt in the hand of the partner of partnership firm in cases where the firm has claimed exemption or deduction. Signing the first batch of 5 unilateral advance pricing agreement. Now let's discuss each of the updates in detail. Amendment in the list of entities authorized to issue tax-free secured redeemable non-convertible bonds aggregating to amounts specified. Notification number 19/2014 dating 26 March 2014. In said notification in the table A for the serial number 10 and entries related thereto, the following serial number and entry shall be substituted, namely serial number 10 entry Indian Railway Finance Corporation Limited, and the amount is 8,853 crore. Earlier the allocation of the amount of bond is 10,000 crore. Now it is reduced to rupees 8,853 crore rupees. After serial number 13, the following serial number and entry shall be inserted, namely serial number 14, entry IFCI Limited, formerly known as Industrial Finance Corporation of India, and amount is 430 crore rupees. For complete list of entities authorized to issue tax-free secured redeemable non-convertible bonds aggregating to amounts specified, see notification at by following the above mentioned link. Approval to the undertaking being developed and being maintained and operated by Pantheon Infrastructure Pvt. Ltd, Mumbai. Notification number 20/2014 dated 26 March 2014. Whereas the central government Ministry of Commerce and Industry in exercise of power under the Industrial Park Scheme 2002 hereinafter referred to as a scheme as notified by number SO 354E dated 1st April 2002 through the Empowered Committee. Has granted approval to the undertaking being developed and being maintained and operated by Pantheon Infrastructure Pvt. Ltd as an industrial park. Whereas the central government, in exercise of power conferred by the clause 3 of subsection 4 of section 80 IA of the Income Tax Act 1961, has notified the undertaking being developed and being maintained and operated by Pantheon Infrastructure Pvt. Ltd. as an industrial park for the purpose of state clause 3 by notification of the Government of India in the Ministry of Finance, Department of Revenue, wide number SO 4700 dated 17th November 2006, published in the Gazette of India, Part 2, Section 3, Subsection 2. Subsequently, the central government, by letter number 1529/2005, dated 3rd February 2014, has withdrawn the same approval granted to the undertaking under the scheme. Now, therefore, the central government, in exercise of power conferred by clause 3 of subsection 4 of section 80 IA of the Act, read with section 21 of General Clause Act 1897, hereby rescind the state notification number SO 4700 dated 17th November 2006 with effect from 17 November 2006. Under Section 80 IA IT Act 1961, deduction, profit and gain from industrial infrastructure undertaking being developed and being maintained and operated by Finance Promoters Private Ltd, New Delhi. Notification number 21/2014 dated 27th March 2014. Whereas the central government, exercise of power under the Industrial Park Scheme 2002, as notified by SO 354E dated 1st April 2002, through the empowered committee, has granted approval to the undertaking being developed and being maintained and operated by Finance Promoter Private Ltd, New Delhi, as industrial park. Whereas the central government, in exercise of power conferred by clause 3 of subsection 4 of section 80 IA of the Income Tax Act 1961, had notified the undertaking being developed and being maintained and operated by Finance Promoters Private Ltd, New Delhi, as an industrial park for the purpose of state clause 3 by notification of the Government of India in the Ministry of Finance, Department of Revenue, wide number SO 462 dated 9th February 2007, published in the Gazette of India, Part 2, Section 3, Subsection 2. Whereas subsequently the central government, by letter number 1529/2006 dated 24 January 2014, has withdrawn the state approval granted to the undertaking under the scheme. Now, therefore, the central government, exercise of the power conferred by clause 3 of subsection 4 of section 80 IA of the Act, read with section 21 of the General Clause Act 1897, hereby rescind the state notification number SO 462 dated 9th February 2007 with effect from the 9th February 2007. Approval to the undertaking being developed and maintained and operated by Creative Infocity Ltd, Gandhinagar, Gujarat. Notification number 22/2014 dated 27th March 2014. Whereas the central government in exercise of the power under the Industrial Park Scheme 2002 as notified by SO 354E dated 1st April 2002 through the Empowered Committee has granted approval to the undertaking being developed and being maintained and operated by Creative Infocity Ltd as an industrial park. Whereas the Gujarat High Court in its order dated 21st February 2012 in Special Civil Application 9247 of 2011 has directed the Central Board of Direct Taxes to notify the aforementioned industrial park for the benefit under Section 80IA in terms of Rule 80C4 of rules within 1 month from the date of court order without any further inquiry, subject to the condition that the Commerce Ministry does not revoke the approval already granted. Whereas in consequence of the same, the central government in exercise of the power conferred by clause 3 of subsection 4 of section 80IA of the Income Tax Act 1961 had notified the said undertaking being developed and being maintained and operated by Creative Infocity Ltd as an industrial park for the purpose of the said clause 3. By notification of the Government of India in Ministry of Finance Department of Revenue Wide number SO 1121 dated 22nd March 2012 published in Gazette of India Part 2 Section 3 subsection 2 subject to the final decision regarding revocation by the Ministry of Commerce of the approval already granted by letter number 15/3 dated 21st June 2001. Subsequently, the central government by letter number 12/2/2011 dated 3rd March 2014 has withdrawn the said approval granted to the undertaking under the scheme. Now therefore the central government in exercise of the power conferred by clause 3 of subsection 4 of section 80IA of the Act read with section 21 of the Journal Clause Act 1897. Hereby rescind the said notification number SO 1121 dated 22nd March 2012 with effect from 22nd March 2012. Agreement for avoidance of double taxation and prevention of fiscal evasion with foreign countries, Sri Lanka. Notification number 23/2014 dated 28 March 2014. Whereas the annexed agreement between the Government of Republic of India and the Government of Democratic Socialist Republic of Sri Lanka for the avoidance of double taxation and the prevention of fiscal evasion with respect to taxes on income. Signed in India on the 22nd day of January 2013 shall enter into force on the 22nd day of October 2013 being the date of the letter of the notification after the completion of the procedure as required by the law of the respective countries for the entry into force of DTAA in accordance with Article 30 of the said DTAA. Now therefore in exercise of the powers conferred by Section 90 of Income Tax Act 1961, the central government hereby notifies that the provision of DTAA annexed hereto shall be given effect to in the Union of India with effect from 1st day of April 2014. View the detailed agreement by following the mentioned link. Under a Section 10(2)(a) of the Income Tax Act 1961, clarification on interpretation of provision of Section 10(2)(a) in case where income of firm is exempt. Circular number 8 2014 dated 31st March 2014. A reference has been received in board in connection with the interpretation of provisions of Section 10(2)(a) of Income Tax Act 1961. Clarification as to what will be the amount exempt in the hands of the partners of partnership firm in case where the firm has claimed exemption or deduction under a Chapter 3 or 6A. The matter has been examined. Subsection 2A of Section 10 was inserted by the Finance Act 1992 with effect from 1st April 1993 due to change in the scheme of taxation of partnership firms. Since assessment year 1993 and 94, a firm is assessed as such and is liable to pay tax on its total income. A partner is not liable to tax once again on his share in the state total income. It is clarified that the total income of a firm for a subsection 2A of Section 10 of the Act, as interpreted contextually, includes income which is exempt or deductible under the various provisions of the Act. It is therefore further clarified that the income of a firm is to be taxed in the hand of a firm only, and the same can under no circumstances be taxed in the hand of its partners. Accordingly, the entire profit credited to the partner account in the firm would be exempt from tax in the hand of such partners, even if the income chargeable to tax become nil in the hand of a firm on account of any exemption or deduction as per the provision of the Act. Signing the first batch of 5 unilateral advance pricing agreement. Press release dated 31st March 2014. The CBDT has signed the first batch of 5 unilateral advance pricing agreement on 31st March 2014. The agreement covered a period of 5 years from assessment year 2014 and 15 to assessment year 18 to 19 and specified the arm's length price for the covered international transaction entered into by the taxpayer. These agreements cover a range of international transactions including interest payment, corporate guarantees, non-binding investment advisory services, contract manufacturing. The agreements pertain to different industrial sectors including the pharmaceutical, telecom, exploration, financial service. The agreement provides a complete certainty to the taxpayer for 5 years with regard to the covered international transaction. The APA program come into effect on 1st July 2012 and the first batch of 146 APA application was received in March 2013. The CBDT has been able to conclude the first set of agreement within a period of 1 year as against the internationally accepted norm of at least 2 years. The whole scheme of APA has been designed with the intention of creating a taxpayer-friendly environment in transfer pricing matter and to minimize the transfer pricing disputes. Before filing APA application, taxpayers are given the opportunity to share their expectation from the APA process during the pre-filing consultations, and the APA team shared a broader understanding of the forthcoming APA procedure. Having received an APA application, the APA team works towards establishing the appropriate economic analysis of the converted international transaction, which also involves a site visit, means physical verification of the business of the applicant with regard to the state transaction. It is this detailed fact-finding exercise which lends credibility to the determination of arm's length pricing under the APA. The APA team furnished a report incorporated function, assets, rests, and lessors, which is further examined at length by the CBDT before its submission for final approval of the central government. Thanks. Hope the presentation is useful for you. Your feedback is valuable for us.